Hello and welcome to this special episode of Big Deal. We have a special guest with us today. Cyril Shroff joins us on Big Deal. Mr. Shroff, so good to have you on CNBC TV 18. Now, your outlook so far as 2016 is concerned, how has the year been overall and what are we getting into as we start 2017?
So first, 2016. I think it has been an exceptional year for it. It was very unique in many different ways. But just first looking at it from a macro deal perspective, I think this year has seen a lot of deal activity. We've seen some exceptionally large and complicated transactions as well. And we are seeing some clear new themes emerging as well. Just to name a few examples of some really large transactions was for instance, the SR Rosneft transaction or the JP and Ultratech transaction. These are just some examples. But if you put all of this together in the round, I think you see a theme of M&A activity centered around stressed assets. This is still not in the bankruptcy zone, but this is still very much in the arena of stressed asset type of considerations driving deal activity and sale of valuable businesses. So that's one theme. I saw a lot of private equity oriented investment as well. Some very significant transactions coming in, and I still think private equity will be a big factor in 2017 as well. So we've seen deal activity getting more complicated. There is cautious optimism in terms of foreign investment coming in. There is a fair amount of domestic to domestic activity as well. And all in all, if you take the year in the round, I think it's been very hectic year.
So we've seen, Mr. Shroff, broad-based deal activity across all sectors. There has been activity, and we also started the year with a lot of consolidation theme really playing out, but that has really tapered out by the end of the year. Do you think that there are a lot of global uncertainties, and especially demonetization, GST delayed to some extent, all of this is putting the deal street in a tizzy right now?
So demonetization is a November-December thing, and since we're talking about the whole year in general, I think it's more the global factors that are relevant. Brexit, Trump, and just this general drift towards a much more nationalistic, protectionist approach, which is probably one of the reasons why you're seeing a higher level of domestic to domestic activity. And the sort of economy and corporates going through a particular cycle at this stage, like the factors that I just mentioned. So those are some of the drivers. I think it's too early to see the demonetization impact on deal activity. That we will know in 2017.
How much time are you giving for that? 1 quarter, 2 quarters, or maybe more?
I'm no expert on this, but again, just looking at in terms of the mood of some of our clients, maximum 2 quarters. Next quarter is definitely going to be tough. And therefore, financial year 2017-18 is what really counts.
But there is some sense of wait and watch at this point because
absolutely. But at the same time, the underlying confidence hasn't gone. It's a temporary. Almost everyone we speak to sees this as temporary pain for the better in the future.
But then the consumption theme was one of the themes which was intact for the last few years. Do you think that is hit very badly because of this new demonetization?
In the short run, yes. But again, people we talk to say that it is coming back slowly. So I think it's fair to say that we should wait for 2 more quarters.
And what do you have to say about the IPO pipeline as well as other ECM trades?
The IPO pipeline is strong. The IPO pipeline is very active.
Okay, so for 2017, what are the various factors that you're watching out very closely which will really clearly define the way the deal street pans out?
So first, let's look from outside to inside. I think the world still sees India as a bright spot. The world still sees a lot of opportunity in terms of investment, whether it's infrastructure or specific sectors. So FDI and related themes will be relevant. Some concerns which the outside world has is about our rule of law environment and governance. And I'll come to governance separately. So this is sort of theme number 1. On the domestic side, I think complexity of getting a transaction done is seen as a major deterrent, but there are strong incentives for people to move ahead on and get deals done, things moving, and start putting things behind them so they can get into a fresh investment cycle. So the drivers are there, and I think 2017 will see a fair amount of activity. And also, if you look at it again from the point of view of this government's current term, it'll be a little past the halfway mark. So I think you're going to see a lot of proactive policy movement from the government side as well, which will drive deal making. That's my expectation.
Which are the sectors? Any particular sectors you think the policy movement will really help?
Make in India will be one of the drivers of the themes. That will clearly be there. In sectors you will see the usual favorites of sort of healthcare. I think infrastructure will see movement. I'm not going to comment on real estate because that theme has got mixed up with this demonetization theme as well. So let's park that one for a second. But infrastructure continues to remain relevant in its broadest sense.
So what has changed in the last few months? Do you think InvITs and REITs, the way they were going, have they slowed down a bit?
Sorry, could you repeat that?
REITs and InvITs.
Yes, I think they are moving forward. As we know that there are a number of deals in the market just now in terms which are, on the verge of hitting the market as well. So that has seen activity, and I have full credit to the regulators for having enabled it to happen. And that does allow the relevant sectors, whether it's infrastructure or real estate, to have a fresh capital base.
So in terms of sectors, Mr. Shroff, we are seeing a lot of action, and especially in some of the sectors like digital space, financial services. What do you have to say about this sector, the way it has been developing? Fintech is one area which could be hotting up, you think?
Yeah, I think a lot has been said about fintech. The regulatory background for that is still a little uncertain, but the biggest sort of tailwind for the fintech sector has been the demonetization and the thrust towards moving digital. So the broader digital theme is enabling a lot of movement philosophically into the fintech sector, but still too early to say whether it's going to be effectively another major part of the financial system.
Why do you say that? Do you think that digital wallet space is commanding too much higher valuation at this point?
I think the jury is still out in terms of whether it's what's the long-term business model there and when will it really make money.
Okay.
And it's still very dependent on regulation, which is a moving target.